Hi guys, this is Steve O'Hare from Signal Centre, and I'm running through a weekly roundup of commodity markets that we cover, and I'm going to go through gold, I'm going to go through silver, oil, and also Bitcoin, cryptocurrency. So there's a couple of markets very popular with clients, and I'm going to run through on a weekly, daily, 4-hourly, and hourly chart, just to give you a flavour of the outlook as we see it. So let's start off with this weekly chart. We had this, obviously the big sell-off in 2011 in gold. Prices stalled around about just above the $1,000 area, and we formed what's called an inverse head and shoulders formation. Now this is a complex formation, which means it's not quite a straightforward left shoulder, head, right shoulder. You can see there are multiple shoulders here that just moved across, and we eventually got the break of the neckline around about $1,357 to $65. Now the accelerated move upwards has topped out around about $1,560, $55 to $60, and we're in the middle of a correction lower. So what happens a lot of the times in these markets, or in these formations, you'll get the move higher, you'll get a throwback to retest the neckline before prices continue higher again. That's my view of gold over the longer term. Now, the short-term chart isn't necessarily agreeing with the overall longer-term picture. The recent move, or the real break higher that we saw, this break through the $1,365 level, has seen price action initially stabilize between, or range between, the 1380 to the 1460 area. And for a while that held prices over a period of 6 months, and then when we eventually got the break higher, we've had a nice break higher, but obviously we can also see that we've actually got a topping formation here, which we expect to go lower. Now again, we've had a bit of a throwback. Prices got back up to $1,520, but remain capped last week under $1,480. Now the sell-off reached the 1445 to 46 level. We posted almost a bullish hammer there. It's more of a doji, but it's a bullish hammer, and prices reacted higher. And again, we've had another doji candle, which has led to a reversal in price action. So overall, we do expect a break of this 38.2% Fibonacci retracement level and a move to retest this area where we saw buyers and sellers competing aggressively, and that's around about the $1,411 area. But our real main target and area we would look to be setting longs for the longer term move would be down around about the 1377, 1380 area. So they're the real levels to watch. I'll take you down to the hourly chart, skip the 4-hour chart, and we see this corrective channel higher. And we, as I said, you get this head and shoulders formation looking quite precarious, and the break of these lows here, the swing low, and prices have accelerated a bit further. So 1455 is the initial support area, and then we're looking to 1446. So currently this week it looks like we're going to be looking to sell into rallies. Obviously, again, as I said at the start, it's very much based on the dollar, and that also takes into account the fact that the gold is a safe haven asset. So in times of political turmoil, which we're seeing with a number of agendas across the world, we've got the US-Iran conflict starting to bubble, and we've also got trade wars between US and China. So there's a lot that's driving gold prices on the short-term price action. So it's you've got to really be careful and be very, very selective when choosing levels to enter, and your stop levels, target levels. So let's have a little look at silver. I'll again jump to the weekly chart. We've seen this very sideways type of price action. Silver seems to be pressured a bit more than gold. It really hasn't had the move higher that gold saw, and so it's obviously that they are two different commodities, but normally are very dollar driven, and we're just seeing the real level that I'm looking at the moment in silver, because I have a view in a similar way that we should see a move back towards retesting the $16.25 area, and also let's bring the weekly chart up. So this is the 4-hour chart. Let's jump back to the weekly chart. You know that the lows back in 2016 around about the $13.80, and the swing lows around about the $14 back towards the end of 2018. And we've had this nice move higher after it broke that trend line or the resistance. And again, we're possibly looking for a retest of this level, which will line up with a move back towards $14. And again, this is a technical correction. On the longer term, I expect silver prices to move higher. Now, if we take a look at the hourly chart, we see this channel formation is being tested as we speak. So we're seeing a break of the $16.90 area, and a break here should see prices accelerate quite quickly to the $16.65 level. Now, this $16.65 level on the 4-hour chart is quite significant. If we take you all the way back to the previous resistance, once it's broken through resistance, it then turned into support, and now we've tested it again back in early November. The reaction higher has started to fade, and we're getting the bearish momentum coming in, possibly looking to retest this 14.65 level. Now, from a Fibonacci standpoint, the levels of support to watch would be the 16.34 straight away, 61.8, and then really the major level of support below that is $15.44. And as I say, the short-term price action is pretty choppy, pretty volatile, and very difficult to get any decent trade on. So I'm really looking at that hourly chart to give a bit of confirmation that we potentially this week could see prices lower again. All it takes is a little bit of inflamed rhetoric on the trade wars or between US-Iran, and everything, all the short-term negativity gets thrown out the window. So let's look at the crude oil. Obviously, US-Iran tension still building. We've got Syria conflict, and we're very much in a symmetrical triangle formation. This goes back a bit further than the rally, but we're trading around mid-range from here. And so if we look at the real top and bottom of this symmetrical channel or symmetrical triangle, we've got upwards of $70 providing a resistance if we're to get there, and on the downside $47. So as I said, it's just quite a really dollar-based, US-based story. We're seeing the resistance coming in on the short-term time frame around about $62, and we're seeing this nice little corrective channel higher currently, and this is containing price action in an orderly type of manner. We saw prices reject the move up to $58.70. We're looking to sell it there on a short-term time frame, but again, we'd look to start to buy around about the $55.25 area. So that's sort of in the middle at the moment. We'll look for price action, see how that develops during the week. Now, Bitcoin dipped sharply lower again. We had this quite decent rally. I'll get the daily chart up to show it. A nice rally over a couple of days at the end of October, but since then price action has just been one way, quite negative. We broke the supportive area around about 7,300, and nice aggressive dip below there, and again prices moving even further lower this morning, got down to 65.60, and we've reacted higher, posting at the moment a bullish hammer on there. But again, don't be too sucked in by that. We had a bullish hammer over the last couple of days last week, and the sellers continue to come in, and take profit. Let's take a look at the weekly chart, and we can see this corrective channel we're in. It's a pretty ugly looking chart. If you want to compare it, it may look a little bit like the gold chart. If we jump back to here, on a weekly basis, there's gold, there's Bitcoin. So pretty similar. We had the big rally, sell off, rally again, and now we're in a corrective channel. Really don't know what to say about Bitcoin. It's one of those markets that it does have these explosive times, and as we saw a few weeks ago, but the overall sentiment seems to be rallies remain limited. So I think I'm quite negative in Bitcoin overall. We had sentiment has been undermined recently from China, with the central bank instructing businesses to correct improper cryptocurrency actions, and also warn investors to be wary of virtual currencies. So there's obviously, you're getting the big pushback from the major governments on crypto, and we're seeing that reflect in the price action very recently. So for me, I'd be looking to sell into rallies on this product as well, and see if we can eventually find, where the real base is in this product. So I hope this has been educational and you've enjoyed my overall view on the commodity markets and the crypto market. Tune in again next week and I'll run through the markets in the same amount of detail again. Thanks very much.